A life settlement is a financial transaction where you sell your existing life insurance policy for a lump sum of cash. Think of it as turning an insurance asset that you no longer need or can afford into immediate liquid cash. The primary appeal is that the offer is typically higher than what the insurance company pays if you simply cancel the policy. When you sell, the investor takes over the premium payments and eventually collects the death benefit when the policyholder passes away. Surrendering a policy is quick and guaranteed, while a life settlement involves a competitive market for your specific policy. While every policy is unique, settlements often provide a significantly larger percentage of the face value than a standard surrender. Always consult with tax and legal professionals, as these transactions can have major impacts on your estate and tax obligations. Understanding your policy options is a key part of financial planning. Thanks for watching, and remember to do your own research.